how the market has been, impulsively moving downwards. Okay, you can now have a picture of where to take out your money. So if you are to measure right about there and you entered right about there and you've realized that the market is exactly at par with your 2D analysis, you can now easily take out your money, because the market will always, in a bearish move, always the market will retrace and goes down. Okay, so there are two entry points into trading: a bullish trend and a bearish trend. Okay, now the other entry that I didn't tell you is what we call a retracement entry, okay, or a retest entry, where when the market comes all the way up to retrace, or when the market pulls back to this zone of this, so we draw. You remember all the time when we see this lower low, we draw what? We draw these things so that when the market breach there, we sell, right? So the other low is when the market comes all the way and touch there, we sell, and we put our stop loss just below there, and then we again scan how the market moved down all the way to enjoy. But in this scenario, the market never went closer to what? To the resistance. Okay, I will introduce the term resistance more further in the next videos. Okay, let's just call it a strong zone, okay, or the previous strong zone, okay, the previous low. Okay, these lower lows, right? So in these lower lows, you just draw this line or this zone. Okay, so in this scenario, the market came and then it touched there, and then you put your stop loss right about there. Okay, enter, and then you again scan how the market has been propelling, moving all the way down. This is how to catch the move from here to here, right about there. The previous videos, not the previous videos, excuse me, the previous explanation, I was telling you how to catch these small moves, right? These small moves, it's almost like 50% of the propelling or of the impulsive move. Okay, the only way to catch the 100% of the impulsive move, like so, like this whole move, if you want to catch the whole move, you actually wait for the pullback. The market, guys, listen, the market doesn't give us all the time the chances to catch these moves. So what do? We move away from the charts when the market didn't give us the opportunity to do so. For example, in this scenario, the market failed to come up to this level for us to enter the retracement. Okay, we failed to catch this move because the market did not give us. So rather, we don't trade than forcing trades, right? So we don't trade when the market doesn't come up to this level. Okay, right now the first initial or the initial entry point that I told you is how to enter from this part when the market breaches this level, which is the previous lower low. You enter, you anticipate, as I said, and then you take out your profits from there. This is a good risk to reward ratio, so which is something like 1:4, 1:5, sometimes 1:6, according depending on how the market has been stretching, right? So the other one to catch more moves, right, is to anticipate the whole, big stretch of the market. Okay, so for example, the market came up to this level right about there. So as soon as it touches there, and if it shows any signs of reversal, we enter, put a stop loss, and we anticipate how the market is going to stretch. Because what a price action analysts do, they anticipate the current market by just simply analyzing the previous data. So the previous data, the market has been stretching. This quite long, this quite long, this quite long. So we just draw our 2D picture in anticipation that the market is going to just come and fill up this whole gap before it retraces back. So when the market comes all the way down, we take out our profits right about there, and we are happy. And this is how we can catch some trades which are 1:10, 1:15, 1:20. So this is how you trade a bullish and a bearish market trend. And in more videos to come, I'm going to be teaching you these same strategies in actual context, in the candlesticks context. Okay, I'll just open the charts and I'll show you, but right now I'm still